Hey guys, welcome back to the third segment on how to really grow a small trading account. These are designed to really help you understand what it takes to grow an account, whether it be a small account or a large account. There's still things that you have to learn that you may not get anywhere else, things that you may not even think about. And these are the things that I'm sharing with you. Now, up to this point, we we talked about the decision you had to make for yourself. You had to decide that you wanted to learn how to trade. You had to commit to it, because without commitment, it doesn't really get off the ground. It only stays a decision. But what really brings everything around is when you act on it. And what I shared with you the last two times was I wanted to help you make that decision. Understand that you had to make that decision. You had to make the decision to commit, and you have to put 120% into the time that you commit to trading. Now, I know a lot of you have full-time jobs. That's fine. When I first started trading, I had a full-time job. And I had to, whatever time I had allotted to trading, I had to commit to it. And I considered myself a full-time trader, because even though I worked a full-time job, I considered myself a full-time trader because I put full-time effort into my trading. There were periods throughout the day that I used as my trading time. At work I had breaks. I had lunch break. I had the time before work, after work, and I committed to that. And I acted on my commitment. And that's the stage we're at now. We're in the process of where we're ready to start acting on our commitment. So just to review what we talked about last week, we really got into the day trading business plan, why you needed it, the importance of it, and some things that you needed to have in there. The main thing I wanted to focus on was the money management aspect of it, because what happens is traders, but when people first come into trading, this is what they see. They see this money, and everything's wallpapered with money, and this is what we want to make. But that's not what it's all about. I watched this TV show, American Greed, and I love that show. I've been watching it for years. And all the time, I would think that, these people are just greedy. They just wanted money, wanted money, wanted money. The reality is, it wasn't the money that they loved. Now, initially, what sparked them to get into that was the money. But what kept them going, what kept that drive alive, was the game, was the process, was whatever they were doing to get that money. That's where the focus was. And the money was just a byproduct of it. It was just what came because of the commitment they put into the process. And it got me thinking that that's kind of what we have to do in trading. The focus shouldn't be on money. Now, money is the reason why we came in. We wanted financial freedom. But in order to get to the next level, we have to embrace the process. And we have to focus on everything that makes trading. So, we can't use money as our focus. But one of the biggest problems that new traders have is they come in thinking, okay, I need to make X amount of dollars in order to pay my bills. So that's their goal. You know, it's like they start out with this goal of making $3,000-$4,000 a month because that's what they need to pay their bills. And when in reality, the only thing you need to look at is what's it going to cost you for your business to trade every month. What's it going to cost you? Now, you know you got the money down that you need to open your trading account with, but how much are the bills going to cost me every month? And this was just an excerpt of mine when I started. This was the first one that I wrote up. My internet was $79 a month. That was an expense I had to add. The chat room, the one I was in, was $99 a month. Obviously, if you're in this one, it's only $69 a month, and if you got the yearly, you're paying just over $30 a month. So, incredible deal you're getting. The scanner, I got Trade Ideas for $85, through a special promotion, and my Sure Trader platform fee. And this was what I was paying. This is what I had to come up with. Now, is it realistic that you're going to make this in your first couple of months? Probably not. So what you want to do is make sure you can pay this out of your pocket, while you're learning. But you don't want to focus on, I'd rather focus on this than $4,000, because you got to take these small steps. Now, I forgot to share with you last week my profit distribution. The 30% I put towards a tax account, 10% goes to my son's college fund, 10% to my daughter's, 10% goes to the savings, and 40% back into my trading. So what I do and what I have is, when I first started this, I opened up a trading account. Okay, this was going to be the account that the money that I put into trading would go into. And when I would wire out, I would wire money into that account, and then I would disperse it from there. And I should have 40% left in there to help, that I was saving up so that I could fund my Speed Trader account. So when I was able to open it, I could just send the money there from that account. But, I'm not saying this is what you should do. I recommend you going to a tax professional, somebody that can help you plan this out so that it's based on you, your needs, and all of that. So, because obviously 30%, I'm going to pay less than 30% in taxes. But, my accountant said the best thing you can do is put more in it, and then at the end of the month, end of the year, when we do your taxes, you pay your tax bill. Whatever's left is your tax refund. So you're not waiting on the government to send you a check. You got it right there. So, that works good for me. But like I said, I recommend you going to a tax professional. All right, so today we're going to talk about embracing that process. You remember I told you about the American greed and how these guys, it wasn't about the money in it anymore. It was about the game. It was about the process. What they were doing to get the money. That's what it was about. And a lot of them actually said that. That it was about the process. It was about the thrill of the act. Even Bernie Madoff said it. It wasn't about the money anymore. It was about fooling the SEC, and it was about being able to do, to do it. And after a while, he got tired of the process. He didn't love the game anymore. And that's kind of when it all came apart. But, it's about embracing the process. So, this week we're going to talk about embracing the process. And next week we should segue into actually managing the trade, and embracing that process and some of the things that you need to look at. But we'll touch on that, toward the end of this presentation. So here's a visual aid that I found that really hits home, and explains to you why professional traders are process oriented. As new traders, we're result oriented, because we're only looking at the outcome. Did we win on the trade or did we lose on the trade? And if we lost, I took a bad trade. And if you won, you took a good trade. But the problem is you missed the learning opportunities that come into this. And then you tend to do impulse trading. You don't have the right mindset to be in this game long term. Everything is short term for you. You see that big wallpaper of hundreds, and that's what you want to get, and you want it now. And it doesn't work that way. And you see professional traders, they're process oriented. They judge their trades and they analyze their trades based on how well they executed it, how well they made their plan. They developed their plan and how well they executed their plan. If they stuck to their rules, if they won, if it was a winning trade, well done. Perfect. If it's a losing trade, it's no big deal as long as they stuck to their rules. If they got stopped out and then the trade turned around and worked, okay, no big deal. I stuck to my rules, and I'll live to fight another day. I know that I'm going to get another trade possibly tomorrow or the next day, and we're going to do well. Now, if they broke the rules, they know that if they won, they were lucky. And they're not going to continue to break the rules and look for that luck again. Because you got to have rules, you got to have that process. If they lose, they take responsibility for it. Okay, I deserve that because I made the decision to take the trade. I broke my rules, and I got what I deserved. They're not blaming anybody else. They're not blaming their broker. They're not blaming the internet. They're not blaming the market. Sometimes I'll complain about, the market makers holding this up or this, that, or the other thing. But if I don't stick to my rules, I'm the one that's at fault. I can't blame it on them if I have a losing trade. So it's totally up to me, and we have to take responsibility, for our own trades. But the key here is embracing the process, understanding that everything that we do in trading has a process approach to it. And if we don't subscribe to that, we're going to have an issue. Now, you've heard of the term baby steps, and you have to take baby steps to become a better trader. And you've heard me say this many times. You have to learn how to make $50 a day before you can make $100 a day. If you can't make $50 a day consistently, there's no way you think you can come in and start making $200 a day. And you can't be consistent. I had that false illusion for a long time that I'm not profitable as I should be because I'm at work. And if I quit my job, I know I can make this money and make it work. Well, in the summertime, as a teacher, we had summers off. And in the summertime, that didn't prove to be true. So for the first 2 summers, I just, forced myself, I taught myself that I wasn't ready. So what we have to do is we have to take these small steps. The first thing we're going to do is you're going to develop a process that's going to help you not lose all of your accounts. You're going to stick to your stops. You're going to be able to manage your risk so that if you get stopped out, you're not going to lose all your money. Because if you lose all your money in a week, then you're done. And I get emails from traders all the time, about them losing all of their money. They start with $1,500, and by the end of the week, they're at like $200. I mean, it happens. And it might have happened to you. It happened to me 4 or 5 times. So I know putting a process in place that's going to help you avoid your losses to where you lose a lot less than what you have been losing. That's going to be the first step. Okay, then as you continue to grow, you're going to start eliminating these mistakes. You're going to start developing your discipline. And overall, you're probably going to start breaking even. Whether it be at the end of the month or the end of the week, you're going to start breaking even. And then as you get further along, you're going to start to identify, who you are as a trader and what issues you have and what you need to fix. Now, if you go back to the first session we did, or the first webinar that we did on this, I talked to you about having to identify who you are as a trader, getting to know you, getting to understand your weaknesses. This was all back here at the beginning. All of, this is going to be part of your growth as you continue to go forward. So you're going to start looking at yourself even back here. Because part of who you are can be a big reason as to why you're taking big losses. And you have to figure that out before you can get to the next step. But eventually, we're going to be up here. We're going to be adjusting and tweaking our strategies, consistently improving. I don't care if you've been trading 10 months, 10 years, or 30 years. If you've made it to this point and you're consistently making profits, you're going to stay in this point. Because you're going to have to constantly adjust to changing markets. You're going to have to. And you're going to have to continue to learn and to grow and to get better. And you're going to have to do this over and over and over again. That's why we have rinse and repeat here. In order to keep your profits consistent, you're going to have to continue to do it over and over and over again. You can't take the elevator up. You can't take an escalator up. You have to take these steps. I don't care if you're mentally handicapped. I'm mentally handicapped. I've got dyslexia. I still got to take these steps. I don't care if you need a crutch or whatever. If you need somebody to help you take these steps, you have to take these steps. There's no shortcut and no easy way of getting to the top. You have to do it. I know this guy that he spent years trying to find people to help him that he can follow. But all of this effort, if you just put that effort into actually learning how to trade, you'll be fine. You'll make it. No matter if you follow somebody, you still have to have confidence. And if you don't want to trade for yourself, then stop. Put your money in a mutual fund or something. But you got to learn. If you're going to trade, you got to learn. You have to. Now here's another illustration on why we need to learn the basics first. Now, what would happen if we flip this pyramid up and we try to balance it on the tip here? We could probably balance it, but any slight movement right or left will tip this thing over. Now, if we build a solid foundation, it's going to be very hard for us to tip this over. We'll have to do a whole lot of pushing and a lot of blowing up to get this thing to fall. So we have to establish these trading basics, discipline, emotions. We have to cut down on our impulse decisions. we have to have the right expectations. We have to have clear, drawn out objectives, and we have to have the right attitude. If you're going to develop as a trader, you have to master these basics before you continue to move up the chain. Until you have completed this first one, you've got your fundamentals down, you don't need to move anywhere else. You got to get your solid foundation. Now, there's a bunch of houses here in Colombia, all over Colombia, $500,000 houses, $750,000 houses that were built. And the builder did not set the foundation. They did not have a proper foundation. And you know, 2 years ago, we had this big flood come through. Now, these houses didn't get flooded, but with all the water that came down, it messed up the weak foundation. Some of these houses split in half. I mean, they actually started cracking and split in half. You can't fix that. You know, you got to tear it all down and set the foundation properly, because the worst thing you can do is keep building a house on a faulty foundation. You're going to keep having the same issues. So for us as traders, we cannot build our career on a faulty foundation. It has to be solid. And so that's the reason why I have you go through and set up a trading business plan, so that you can establish realistic expectations. You can have clear, drawn out objectives, and you know what the right attitude is to execute these things. You know, your plan is the beginning, and it's setting the base for your foundation. So if you skip that and you don't put the right effort into it, then you're starting out building this up on a shaky foundation. And some of you that have been trading for a while and haven't been successful, and you don't have a trading plan, you could be failing because you don't have solid foundation. Now, the discipline and the emotions and the impulse decisions, what we're going to talk about this week and next week, is going to help you combat that. The process that we talk about is really going to, to help bring you along. So the process approach is something that I firmly believe in. It's something that I used in education, because there's a process to teaching, there's a process to learning, and as an engineer. I firmly believe in the process approach. I can honestly say that is what turned the corner for me, is understanding that this is a process and embracing that process. So you can think of any task that you do every day, any task that you do, just think about it. Okay? If you don't follow a process to driving a car, you may not get anywhere. Something as simple as putting your foot on the brake to start the car. Something that simple. If you never put your foot on the brake in these newer cars, you'll never start it. You can hit the button all day long. You can put it down, push your hand on the button and hold it for an hour, and it will not start the car unless your foot is on the brake. So that's a process. And it's something that simple. So in trading, it matters, because it's going to describe how our trade is going to be put together. It's going to provide the focus for executing and managing your trades. After the trade, it's going to provide a tool for you to reflect on it and determine if there's something that you missed or something that you can improve on. And something that I left out is how you start your day. Some of us, a lot of us, our day starts in the morning. But there's a lot of traders who are in different time zones, in different parts of the world, that our 9 o'clock in the morning is their 9 o'clock at night. Or it could be even worse than that. So how you start your day, how you start your trading day is very, very important. And there should be a process to that. Because as traders, the first thing we have to do is figure out what matters to us as a trader. And that's what the first class was about. Trying to help you determine who you are as a trader. What things have helped shape you. And as you continue to learn and to put into practice what you're learning, you're going to develop that perspective. And then you're going to be able to continue to develop your process and make it specific to you. You know, it's all about making sure what you do is authentic and it works for you. Because there's so many different ways you can trade. You have to find the one that fits you. It's like an art form. Okay, so learning how to trade really is similar to learning how to swim. It's a process. And you can connect this to anything. How we learn how to write the alphabet. You know, when we in kindergarten we were learning how to write, we didn't just write the whole alphabet to start with. We learned how to write the front slant, the back slant, and then we learn how to, you know, draw the line to tie them together, and we make an A. You know, when we learn how to write the B, we drew a straight line, and then we learn how to draw the hoop, and then the top hoop, and then the bottom hoop. I mean, it's slow, it's meticulous, but it has to happen. You know, it has to happen for us to be able to get to the next level. So I related it to how I learned how to swim, because, you know, the first thing you do when you go sit on the side of you see this big pool of water and you don't know how to swim, you're intimidated as a little kid. So the first thing they have us do is sit down on the edge and put our feet in the water. Okay? And, you know, we get comfortable with that. And then we're building up trust with our instructor, so he or she can, you know, pick us up off the wall and just kind of wade us around in the water while they're holding us. You know, they're building up trust between us. And then it's time for us to take our first jump into the water by ourselves. You know, and then the instructor's holding us as we kick and stuff around. And then eventually we get onto a wafer board and we're paddling, holding on to it and kicking our feet by ourselves. You know, and then, you know, as we learn everything, then we start putting it all together. And we're swimming in short little bursts. And as we practice and as we get better, we extend it out. And we extend it out. And pretty soon we're swimming from one side of the pool to the next. And if you think of trading the same way, you know, we have to attack that process. We have to continue to reinforce and put together what we learn every day. You know, we had to commit to getting our feet wet, to getting in this. You know, putting forth the effort, putting forth the money if we had to. You know, whatever we had to do to get going, we had to commit to that. You know, you had to trust whoever you were learning from and make that first jump. You know, you had to find somebody that you could trust or believe in to help you make that first jump. You have to learn to be comfortable and act by taking that first risk. You know, you have to be comfortable in who you're working with, in yourself, in everything. Because if not, it's going to be hard for you to act. It's going to be hard for you to take that first jump. And then as you continue to take these small risks, you're going to build your confidence and the foundation that you're going to need when you're on your own. Now, if you keep attacking the process every day, you will continue to grow. It's all about attacking that process. And that's how you need to learn trading. You need to approach all the education that you get in trading. You're going to have to approach it, using this process, taking your time. Because you can't buy all these videos and try to binge study in a weekend and think you're ready to trade. It doesn't work that way. There's a process to learning, and I'm not saying you can't use a DVD or videos to learn, because you can, but you have to follow the process. You can't skip the process. Okay, so one of the first process that you're going to need to work on is how you approach the market. Okay, for me, I approach the market the same way every morning. You can't take this as a hobby. If you treat trading as a hobby, you're going to get hobby results. And hobbies are just things we do for fun that we just throw our money at. So you have to have a serious approach to trading. So whether you're starting in the morning or whether you're starting in the evening, after work, while you're at work, however you do it, you've got to have a way so that you can approach the market the same way every day. Or if you don't, you have something in place already that you're going to be comfortable coming into the market with. I wake up, just to give you a quick idea of what I do, I wake up 5:30, go to the gym at 6, go work out, be back here a little bit after 7. At the gym, I take a shower and all of that stuff. I'm back here. I cut the room on, put the scans up, and I start fixing me something to eat. But when I come home from the gym, I'm coming to work. I've taken my shower, I'm dressed, I'm ready to go to work. So I have that mentality that I'm coming home, I'm going to work, and I get my day started. So I have been trading a lot more pre-market while I'm cooking breakfast, and from what I can tell, I probably should cook breakfast all day and trade, because I'm doing better with pre-market. But I have that process. I have a tablet. I can sit there and I can do it while I'm cooking, and I don't have to run back and forth to the computer. So I have a process in place, a routine that I follow every day. Because what used to happen was the market would open, and everything I thought about, I would forget, not have that deer in the headlight look. So if I have an approach, and I approach the market consistently every day, and I come in, then my mind is going to be clear, and I'm going to be able to focus on what I have in place and the plans I have for the day. Professionals, they have a routine that they use to prepare. If they're professional businessmen who are trying to get a new account, or trying to sell their service or products, before they go into these meetings, they have to approach, speak in front of the board of directors, they're going to have a routine they use to prepare themselves, to get themselves psyched up and ready to go. Because it's not about the money, it's about the process. It's about the completing the challenge. And everything that they do to prepare themselves and the actual act is what drives them. And that's what we have to have in trading. It's not the money even though the money brought us in, after a while, the money has to come second nature to us embracing the process, embracing what we need in order to continue to grow that money. So they love the process just as much or more as the prize. You know, think about professional athletes. You know, for them, it's not about the game. For them, their love is the preparation, the strategy, the film sessions, trying to break teams down and beat them. You know, that's what it's about. Most of the players that you see out there on the court that actually get to play, you know, their love is in preparation. You know, their game is won or lost pretty much before they even set foot on the court, because it's all about the pregame thing. When I was in high school, we played when we had a football game. You know, we didn't eat lunch with everybody else that day. After all the lunches were over, we'd go in and we'd have steak. We'd have a lot of protein. And we'd have our pregame meal. And that was a process we had to prepare for the game. We had warm-ups. We had specific things that we did. Same thing in basketball. You know, there's a process to preparing for the game. Seems like the game is just the end result. And the trading is the same way. Our actual trading is the end result. You know, all of the work and everything goes into the plan, into following the process. So every morning, and you see this in chat, my watch list comes from a specific scan that I use. And, you know, you guys may ask me about different stocks. Now, I'm not being a jerk by blowing them off. It's my process that I'm not going to look at, or I'm not going to trade any other stock that's not on my watch list. I mean, it's not on my scanner and on my watch list. So if it doesn't hit my scanners, I don't put it on my watch. You know, it's got to hit something. It can't be that somebody said, "Oh, this looks good," and I look at it and I say, "Oh yeah, I'm gonna take it." It doesn't work like that for me. So I like to have my own watch list to where I'm ready and focused, and I know that this stock met my criteria, and this has a good chance of, you know, making the move that I want it to make. I'm going to vet each stock the same way. I'm going to use that checklist that I go through to make sure that the stocks meet my parameters. Now, most of the time, the scanner now is, if it hits the scan, it's going to meet my parameters. All I need to do is look at the fundamental news on it, and then that's it. But I try to have my watch list complete by 9 o'clock. So you won't see me add anything to my watch list after 9 o'clock. Now, it may be a little bit late, maybe 2 to 5 minutes late with me posting it. But I'm going to have that so that the time between 9 o'clock when I get my watch list set and the open, I'm going to be watching them, and I'm going to be developing a trading plan on them based on the price action I'm seeing. So when the bell rings, I'll have my plans written down on note cards. Now, I had to do this, and this came about when I was trading at school, because there was about an hour between the time I built my watch list and the time I could get back to the computer and learn. And actually trade. So I would forget in that amount of time. So I had to actually write my trade plans out on a note card so that when I came back to it, I could refer to the note cards. And then I realized this is helping me focus on just my trade. I'm not thinking about all this other stuff. I'm focusing on the card and to stop making the move that I wanted to. So some of the things I put on it, is what is my plan if it sets up to the long side? What's my plan if it sets up to the short side? What setup do I want to see? Where are my profit targets going to be? Where's my stop going to be? Is there a large enough window for the trade to make sense to me? Just asking yourself questions like this, when you're planning your trades, it's going to give you a big advantage. Because you're going to have a plan. You're going to go into battle with a plan, and all your focus needs to be is on execution. It shouldn't be on how much money am I going to make, how much, how much of this am I going to make, how much of that am I going to make. That's not what the focus should be on. The focus should be on executing your trading plan. And if you execute it, you're going to get paid. All right, so once the stock sets up and it signals and triggers an entry, I'll enter without question. Well, that's the plan. It doesn't always work out that way. Sometimes I do question what I see, and I end up losing out. But I'm going to have my profit targets written out. I'm going to have all my technical levels out, where I'm going to base my stop loss on. So when I'm entering the trade, I don't have to focus on anything but hitting my marks and locking in that profit. Just like, if you're a race car driver, hitting your shift points. Or if you're a circle track driver and you're gonna work, you got spots on the track where you brake, you decelerate, you brake, you turn, you get back in the gas. There's different points on the track. All you have to do is hit your marks. That's all you have to do. And then that kind of helps you with a lot of the other issues that you have. Now, there's some that say knowing when to exit is the hardest part of the trade. But if you have a plan, and you know exactly where you're going to take profit, you're going to have a better chance of letting the trade work itself out, because you've got solid targets. And you'll be able to cut your losses off quick. You'll be able to let your winners run to where it makes a legitimate profit. But the big thing is, this will help you manage those emotions that we talked about. It can help you from making these quick snap decisions. You're able to keep your emotions in check and use them to your advantage. And that's going to be key. So once the trade is done, I'm going to reflect on how well my plan worked. How well I stuck to what I had written. Most of the reflection on my trades is going to come in the evening when I review and recap my trades. And I use a model for that. I'm going to share that with you in a minute. But I think what a lot of people forget about is reflection. And reflection is just, what did I do right? What did I do wrong? Should I have sold earlier? Should I have waited for entry? All of these questions you ask in your reflection. And here's the model that I use. And I pulled this directly from teaching. This is what I used in my teaching. And I journaled this. I described what happened. What was I feeling? What was I thinking? What was good or bad about the trade? And I answer all of these questions, kind of in a paragraph form. And that's my reflection. That's my reflection in my journal. Now, obviously, I'm going to have the trade results in there, but you keep all of this together. A lot of people now just keep an electronic journal. You know, some take a PowerPoint slide and they'll put a chart, the picture of the chart up there. They'll have their reflections typed out. They'll put that there. They'll have the results of the trade. And that's all. And they just keep adding to their PowerPoint slide. And they make one each week. And they'll have one for each week. And you can put those at the end of the month. You can put them all in a folder and have all of those PowerPoints for that month. So whenever you want to go back and reflect and just check to see, you know, what you did that month or this month, you'll be able to go and take care of it. So, you know, this is one of the most overlooked things is reflection. Now you can get a subscription to like TraderView or someplace like that. But for me, I'm all about authenticity and using, you know, and you developing your own. You know, I don't like using templates. I didn't like using templates teaching. I like to freehand write my own lesson plans and all of that stuff. So I really recommend you do that. But you can definitely, you know, use some other software where you could actually download your trade into it. You don't have to do any extra typing, and you can keep an electronic journal that way. But it is an expense, so you know that's something you have to think about. See if you can add that in. But the last thing I wanted to talk to you about is just what, you know, the journal, what the role of it is. You know, I gave you some ideas of how you can journal it. But the very first document you want in your journal is you want your trading strategy. Okay, now you may not print your journal off and put it in a notebook, but you definitely want to print your strategy off and put it in a notebook. You definitely want to do that. Sorry, my dog is barking at a squirrel. But you know, in that journal you want your trading plan. And in your trading plan, you should have your strategy, your rules for your strategy. And that's what this is. You know, your entry and exit rules, where you place your stop, how you're going to manage your trades. All of that stuff is part of your trading plan. And in your journal is where you're going to document, you know, your thoughts on the trade. You know, your thoughts, what's coming out of your mind. And you can use that model I shared with you to really reflect and dig deep on your trades. And that actually stopped me from over trading as well, because if you have 10 stocks to do this on, you're probably not going to do it at night. And if you did, it's going to take you a long time, and you're not going to get the benefit of reflection. And that's something that's going to help you continue to grow. It's going to help you not fall back down those steps so much. So it's very important that you do some type of journaling. It could be video journaling. It could be, you know, when I first started doing videos, that's what I was doing. I was video journaling, you know, way back when. And I was putting it out there so that other people can look at it and tell me, you know, hey, you're dumb. Why would you do this? Or, you know, that looks good. I never thought of it that way. Just getting feedback, you know, and that's key. You know, that is key. So I want you guys to really embrace the process. Embrace it. you really, if you do that, if you do that and you put your energy into the process, into acting on it, you're going to see tremendous growth in your trading. But you have to develop it. It has to be something unique to you, and something that you can refer to and update periodically. So definitely, if you have an electronic journal, then you want to have access to your trading plan, as a part of that journal. If you're putting it in one big file, then you want to have your trading plan there too. You always want to have that plan there, because that's your foundation. That's your so-called trading Bible. And it's something that you're going to have to, it's a living, working document. So you have to keep it up with everything that you do. All right, so if anybody has any questions or comments or anything, you can shoot me an email, ed@averagejoetrader.com. I'll be glad to answer them for you. And remember, next week, we're going to work on trade management. How do you manage your trades when you're trading with a small account? You can't manage it the same way as you would a large account. Some people will say you need to do it that way, but you can't have that mentality just yet. As far as I'm concerned, you have to perfect small. If you can't perfect small, then you'll never blow up big. So, we want to focus on growing that small account, because the skills that you develop doing that is going to pay dividends when you get into a larger account and you're able to take larger position sizes. And that will allow you to, make a lot more money. But remember, it's the process. It's all about the process. Right now we're trying to learn and develop skill, and we're trying to grow into that trader that's going to sustain us throughout our career. All right, so you guys take it easy. I hope you enjoyed this one. I hope you're finding value in these videos, and I'm going to continue on until we get to the end. So, take care, and we will see you guys in the market.